So, good evening, guys, and thank you so much for joining us. So, we have Mrs. Tina Garodia today, uh, who's going to be presenting a run through of the application. So, one of the most demanded webinars in the recent past, and this is it. Without further ado, just a little brief on Mrs. Tina. So, she's part of Quantsapp's research and development team as well now. To just explain the application's features, and it'll be a very open session, so you can feel free to put in your queries as and when you have them. So without further ado, Tina, you can take it over from here, and you can use the chat box for any discussions. Thank you.
Hello friends, am I audible? Yeah. So coming up to the concept, so it's basically completely a option trading platform which helps you to analyze the data, which is the core in options trading. So something which any option trader would agree is like the way we analyze the data in options, it needs lot of peculiar behavior. It needs to know lot of peculiar activities in the options. So basically in this webinar, we'll be understanding about the various tools which we are having in the concept, which can be helpful to you in your day-to-day trading. So I have bifurcated the tools in 3 sections. Something which is for more on analytical tools, which you can use it for your intraday or for 1 or 2 days trading perspective. Secondly, to get something on the positional perspective, to know the broader range of the market, broader perspective. Third is more info type of products, which it's good to know, but it's not necessary you need to know it. So it's something which could be there on back of your mind, but may not be the core reason of your trading. So just to begin to be on the same page, we should be having the latest version of Quantsapp in both iOS and Android. So the version which is currently live in iOS is 1.3.5, whereas in Android the version is 1.0.45 bracket 50. To know from where you can see this, you can go to more. Once you scroll down, you can see the versions once here. So this is, I have basically a UI beta version, so mine is 1.3.6. For the rest, you will be having 1.3.5. Similarly, on the Android, you can have it because there are a lot many new features which we have added recently. So if you're having the updated version, it would be for completely beneficial for you. So without wasting much of the time, let's jump into understanding how Quantsapp can help you to analyze the various data which are there in option trading. Now, the overall in the application presently, we are having 3 premium products. These are optimizer, option backtesting, and option triggers. While we have 16 free tools which are used on day-to-day analytical purpose. So let's understand how we can use these tools. The first one is the optimizer. The core of Quantsapp, or say our journey started off with the optimizer. I've been a derivative trader since last 14 years. The one thing which used to come to my mind is like, kaun si strategy karni hai. So at times, without wasting much time, it was like ki bull call spread karo, bear put spread karo. So it's the most simplest one, and it is there in any market. Every time you can use it, because we don't think out of the box, or we don't want that new strategies to come into picture. The reason is the strikes which are there in the options. There are multiple strikes, and it creates a lot of confusion for a layman. So we always try to keep it simple, saying that let's buy one single leg option, or at most just do the 2 leg options. But now, when the challenges in the derivative market are increasing, or I would say rather the markets are getting much more volatile, we need to look out for options which are there apart from a single leg or like a 2 leg strategy or bull call spread. I agree these are the best one till date, but still there are a lot many volatility strategy, lot many oscillating strategy, which we use it can definitely help us to get an edge. So the core concept of optimizer comes to reduce this complexity. Without thinking, it will give you an answer like, for my forecast, what is the best strategy? So how we go about doing it? So there is something called as a fine strategy. So now here I need to put my forecast. The forecast is first the symbol, which symbol I want to trade. Second, the direction, whether I am bullish, bearish, either I'm expecting market to be range bound, that is oscillate, or am I expecting market to give a stupendous rally any direction, but I am not sure about the direction. So here comes the either ways. So there are four broad category where any strategy will fall. So either it could be a bullish strategy, either it could be a bearish strategy, either it could be either ways one or an oscillate one. So we should be having a clear understanding of which direction we are expecting. Then comes the target date, a very, very important element when you're doing an options. When you're doing an option, it is not necessary you're holding the option till expiry. Rarely an individual holds the option till expiry. We hold it for 1 day, 3 days, 7 days, or so on. So we need to be practical in putting the inputs also, like what is my nature? Am I a swing trader? I am looking out for a strategy which is for 3 days. Then just put that 3 days, because it will give you the best strategy which is fitted for that 3 days. Then comes the target and the stop loss. So let's move. Say for instance, Nifty. Currently the CMP is 10,932. It will auto-populate. I'm bearish on it. And I expect that by 27th of August, the Nifty can come down to 10,600. And I want to keep my stop loss as 11,050. So these are the inputs. Now there's something called as optional parameters. What is this optional parameters? Basically, no two individuals are same. Similarly, no two traders have a same view. I could be bullish, but I am conservative in my nature. Second person is bullish, but he's very aggressive in nature. So both will have a different risk parameters. So we need to find the strategy which suits our risk parameter. So here are the optional parameters. The first one is a one lot multiple, which means that you are doing one lot of the strategy. So if I say a bull call spread, it is a combination of one option buy and selling one option, which is a higher strike one. So the combination is 1:1. That means it's a one lot multiple. Similarly, if I am saying ratio call spread, it is buying one lot and selling two lots. So the combination is 1:2. This also means a one lot multiple. So when I say one lot multiple, I want to do one lot in that strategy. Second comes the capital and risk. Now in this, I say I have a defined capital, margin, and what is the risk I'm ready to take in my strategy. Am I ready to take 3% of the risk, 5%, 10%? What is that? What is the value I'm looking out for? So basically in rupee terms, you're defining this capital and risk. Min and max strikes, this the algorithm will pick up on its own. However, the user has a flexibility to change it. It again depends, like if you agree in one thing, still in the Indian markets, we are seeing the spreads are there in the bid and ask. There are some sort of mispricing still exist in the strike prices. So the algorithm will run through the entire option chain and give you the best strategy for your forecast. But say for instance, gives you a deep in the money option or deep out of the money option, which you don't want to do it, you can customize and you can select this min and max strike so that you can reduce your entire strike selection criteria. I'm keeping it same. Then comes down and up. It's very, very important. Basically, these are the volatility parameters. When I say volatility, when I'm taking a strategy, volatility in the Nifty would be say 17%. But is it necessary this volatility will remain 17% throughout my trading period? Definitely not, because markets are dynamic, so is the implied volatility. So I need to find a strategy which takes care of the moving volatility or the dynamic volatility nature. So by default in the application, we have incorporated 25% up and 25% down volatility scenario. That means current vol is 17%. If the vol falls by 25% from 17%, which is nearly like 4% drop, it comes to 13. Or it increases by 25%, which comes to 21. So my range becomes 13 to 21. In this vol scenario, give me the best strategy. So I am taking care of the volatility increase or decrease. Now your user has a flexibility whether they want to put their own custom one. Say for instance, right now market is in a rising vol situation and we are almost at like a last 3 months highest point of the volatility. If we see a breakout from here, the volatility can just go northways. So I expect the volatility up could be say 35%, while the volatility down could be say 20%. So I don't want 25, 25. I have a different vol expectation, which I am putting here. Now comes the filtration. Again, sorry, there is one option of limited risk strategy or all strategy. So limited risk strategies are completely hedge strategies wherein there is no risk of unknown. So you don't have any naked short lined up. So basically, if I say bull call spread, it is a limited risk strategy because there is a defined reward and defined risk. Butterfly, wherein you're buying one lot, you're selling to higher strike call, and you're buying one more. It's again a limited one because of well-defined reward and risk. When it comes to all strategy, it will include some sort of like an unlimited one, like a ratio call spread is unlimited after a break-even point, or I'll say short straddle, short triangle, where there is a risk of unknown. So it may not be unlimited, but there is always a risk of unknown. So if I'm a conservative trader or just started my option career, I will go with a limited risk. If I am sort of like have a good experience or good hands-on into the option trading, I might go for the all strategy, which includes limited and unlimited one. Okay. Then comes the filtration of optimal, reward to risk, absolute profit or ROI. By default, we have kept it as optimal. Why? So there could be a scenario where one strategy is giving you 1,000 rupees profit and in loss, there is just 100 rupees loss. So your reward to risk is like a 10:1. Wow. If I'm a reward to risk person, that sounds really wow. But is 1,000 rupees is what I'm looking out for? I'm not. When I'm putting my money, I'm putting my margin, I'm looking out from something on the revenue perspective also. So though it might be good on reward to risk, I am looking out for some higher profit thing. I have a second scenario wherein like the profit is 8,000, the loss is 2,000. Reward to risk is now 4:1. But still I will go for it because when I'm making money, I'm making little higher money. So this way, optimal would be the combination of a reward to risk, absolute profit and ROI. So by default, we have kept it optimal. You can change your setting and select the one which you want. Comes next the maximum legs. So we have maximum legs as 4 by default. You can change it to 1, 2, 3 and 4. Actually, it is not required. So even if you want to do, you can do it. So max legs is 4. And maximum output we have given is 5. So you will get the top 5 optimal strategy. You can again reduce it to 1, 2, 3, whatever we want it. So rest of the settings, we actually don't need to change much on the filtration, maximum legs or maximum output. Once we are done with this thing, we just apply and just say get strategy. Cool. That's it. It has run through 200 million combinations and the speed is in front of you. So it's just running in a most optimized manner, the optimal way the calculation could have been done using the power of technology. So the edge which the optimizer has is the speed, accuracy, and taking care of all your intra-expiry volatility. So you are taking care of your volatility parameters, you are taking care of your Greeks, you are taking care of time decay, and you're getting the best strategy. Now I put forward a question. I do a long call at the start of the series, and I do a long call one day before the expiry. Does both have the same riskiness? No, because when I'm doing at the start of the series, though the premium is high, but my time decay is not much, I can still hold on to my option and go home. But when I'm buying an option one day before expiry, one thing is very certain: the next day when I'm coming on the expiry day, my time value will let my option go to half. So the riskiness is different at different time to expiry. So your strategy will also be different at different time to expiry. You can check it for yourself. When you're doing for any weekly option, the strategies are different. When you're doing a monthly option, the strategies are different. When you're doing a strategy at the start of the series, it is different. When the volatility is high, the strategies are different. When the volatility is falling, the strategies are different. So it is adaptive in nature. So the algorithm doesn't need to be told like, boss, this is a high vol situation, let me be cautious. The algorithm will learn for itself. So now you have the top 5 strategies: the long put, bear put spread, put ratio peg spread, bull put ladder, and bear call spread. So now you can have a look on in all the 5, select the one which suits your nature, temperament, and go for it. So say for instance, as a bear put spread, it's saying to buy me 11,250 put and sell a 10,400 put. So it is just saying because we are very close to the expiry. So as we are close to the expiry and given my target is 10,600, to make the max money, I need to go to in the money option. Because if I stay to add the money or out of the money, the time will kill us. So this is all depending upon where in the expiry we are standing. So when I say, I don't want to go for 10,400, then we can go back in our setting page and say, I don't want 10,400, change it to say 10,800. The min strike, keep it as 10,800, max strike, keep it as 11,250. Apply, get strategy, done. So now this strategy would be different. The put, it is asking me to buy 2 lots of 10,800 put at 54 rupees. You have the various parameters. The first, the volatility one, and with a skew up of 35% and skew down of 20%. So when in our input, we have kept vol increase of 35 and vol decrease of 20%. The same thing is here, 35 and 20. Now when the vol increases, what is my PNL? And when the vol decreases, what is my PNL is given here. So you have the best IV case and the worst IV case. I go there, I analyze it. When I analyze it, I can see the days left to the expiry. So based on the days, I can now do the synthetic. So you can do a much more deeper analysis into it. So when I say I reduce the days, I can see how my PNL will get changed. When I increase my IV skew, how my PNL will change. Similarly, if I decrease the IV, how my PNL will. So you will have a different PNL at different IV at different point on the day. And here you can do a complete deep analysis of how to go about doing it. So you can get the data on the table as well as on the graphical way. So here you get the complete data. So at this section, analyze, it's very important because sensitivity analysis comes here. So here you can actually go and see, even though if my expectation was 5 days, if my target achieves in 2 days, am I making money? Similarly, if my stop loss was say 10,600, instead of coming after 3 days, it comes the next day. How much is my loss? Because strategies don't behave in the same manner of what they are supposed to do on the expiry date. So like a butterfly will give you a handsome money on the expiry date, but it will not give you money at the start of the expiry. So each strategy has a deeper relationship with when it comes to time and when it comes to vol. So any trade you take, it's very important to do the sensitivity analysis. So this way you have a complete picture of the strategy. Now say for instance here, you analyze it, you can even export it. So when I say export, you can export to the second tool, which is called as a strategy manager, which basically helps you to manage your trade. So when I come to managing your trade, means it will tell me the first, what are my risk parameters in terms of what is the margin, what is the ROI currently. Then it will tell me the Greeks. So we'll go there and see. So I'll go to strategy manager, say tracking. Okay. So you can set the MTM alert. Very important in the option trading is the MTM. When we do a single leg option, it is easy. It is as good as like you're buying a future or you're buying a stock in a cash market. So it's very easy to keep a track of it. But when it comes to an option, what you are looking at is the spread. So basically, I have bought one strategy at a buy price of 100, one strike, and I've sold an option at 50 rupees. So it was 150, my spread was 50. Now from 50, it moves to the spread of 70. Then it moves to the spread of 100. So basically, you need to calculate the spread, and based on the spread, you need to calculate the MTM. So here, you can put an alert on the PNL saying that whenever my profit in the particular strategy exceeds rupees, say 5,000, alert me so that I can book my profit. Similarly, if there is a loss in my strategy of 1,500, alert me so that I can exit my strategy. I don't need to keep a track of what is the spread going on. I don't need to be on front of terminal every time whenever I'm taking an option strategy. So there would be a notification coming up and you will get the alert. So say for instance, put the PNL alert of 5,000 and PNL below minus 2,000. So the minus 1,500. Save. So alert has been saved. Now when I go to manager, my position, I have this strategy in front of me. So I have a Nifty long, and here comes the complete structure. So you have your strategy with the name, you have the MTM, margin, because we are just buying an option, the complete premium is your margin. What is the ROI, and alert above, alert below. Your Greeks, the positional Greeks comes into picture, which is very, very important. As you go more into the two-leg strategy, these Greeks are main. Theta has its own relevance in the, as we come closer to the expiry, it will tell you every passing day how much money your strategy would be losing out. So it's a rupee term. So one day I hold on, it will lose 879 rupees. Vega, it will tell me if the volatility increases, how much money I'm making. So if 850, if my volatility increases, I make 850 rupees. Gamma, though small, it is the most vital tool in the Greeks. So once you go into the deeper into the option, this risk parameter comes handy. Again, in the manager, you can analyze your trade. Similar structure what we saw in the optimizer analysis, same thing you have in the manager analyze. You can analyze based on changing the days, based on changing the volatility, increasing the volatility, decreasing the volatility, or changing the range of upper and the lower bound. So now in manager, you can set alert. If you have not set the alert while making it, you can set alert while going to any of the position. Just click on the ring bell. You will see what is the alert set. You can edit that thing. Now you can even delete or archive your strategy. So once you have done a strategy, it's there in your manager. Post expiry, it's very important that you transport this strategy to the archive so that you always have the current expiry in front of you. So you can archive the strategy or delete the strategy. The ones which were not traded or just from the tracking purpose is there. So you can have a track record of your strategy. You will come to know how we have behaved over the period, what were our successful strategy, what were our not successful strategy, the one which made money for us, which scenario were there. So this way you can have your own archive. So you can even edit the strategy. Once I took a long put, now thereafter I have added some legs to it. So I want to edit the strategy. We can do this. So when you say here, you go, you have the complete list. Now you can say, I am selling a put option. So I say option 29th August. Say for instance, I sold 10,600 PE. Say get CMP was 18, or you can put your own price. So I sold at 10 rupees. So I will just mention, say 10 rupees. Okay, sell, add. You can see the one became 2. This shows that there are 2 positions now in this strategy. Click right. You can change the status saying that traded or tracking. I say I have traded this one. So now this strategy is of 2-leg strategy, and now you can analyze it the way you want. As we have sold it in a different way, the structure is not similar to what the bear put spread normally looks at. So you see something different. So you have 2 lots I have bought. I have sold only 1 lot. So that's why it is just partially. So it would be a dynamic structure which would be displayed here. You can see, you can edit it, you can understand this parameter. So basically, optimizer plus a manager combination works wonderfully. You create a strategy in optimizer based on your forecast. Then you export that to a manager, see the Greeks parameter, see how do the sensitivity analysis of time, volatility, and keep alerts. Setting alert is very important when you're doing an option strategy. So this way, optimizer and the managers comes into picture. So when I say now in optimizer, we had one more thing. So we saw the first find strategy, which was taking the strategy from the complete horizon. Now, if I say I'm a person who loves to do only short triangle, but I'm not sure which strike I should be doing it. So I go to find specific, put the symbol what you wanted. Say I want to do oscillate strategy. Next, I'm doing short triangle. Now you put your range. So what is my range? I'm expecting Nifty to be in the range of say 10,800, lower range, upper range 11,100. Stop loss is very, very important. You cannot move forward without a stop loss. So 10,700 is my SL and 11,200 is my SL2. I say find. Now it will tell you which all strategy suits your parameter. So you have we did not change the time period. So it's showing just for 1 day. Say for instance, I say instead of 22nd, I say 27th August. Now the strategy would be different, right? So you saw that when my days to expiry was just 1, when my target date was 22nd of August, it was selecting a weekly option because weekly option had a better chance compared to a monthly option. And when my time to expiry went to 27, my target date went to 27, it selected the monthly option. So this way it has its own learning. It is doing the machine learning wherein it picks up the expiry, which is the best suited for your entire forecast. Here comes, you can see the strategy. So it's saying 10,650 put selling and 11,250 call. Despite my view being 10,800, 11,100, it is not being stereotyped. It is giving you a different strikes and which has a higher probability of success. So you can see I selected Tuesday. So it was 2 days left before. So it was showing me for the 6 days. Now, instead of Tuesday, if I want to say on Thursday itself, how will this strategy PNL be? So here is the PNL, 3,000 rupees. 1 day before, it would be 2,800 rupees. So this way, your PNL would be different at different type of type. So using an optimizer, you can find a strategy from the list of strategy. You did not be a particular about what strategy you want to do. It will give you the top 5 best suited strategy. Using find specific, you can go and do minute analysis of one strategy. It will give you the best right combination for that particular strategy. Using manager, you in the my position, you can actually go and evaluate your strategies. What is the position which is giving you the maximum profit, which is the position which is at the loss. You can set alerts using the manager. Now, at times it happens that I'm a person who do future long and I try to do some hedging along with it. So when I buy a future, I sell a call, I sell a put, I have my own custom strategy. So you can enter your own custom strategy using add position. So you have a tab of predefined and a custom. Predefined has the same list what we have in optimizer. Custom, you can go and add the position which you want. So if I have done a future long in Nifty, so you can add the price. So say the CMP are added and I have done option call sell and I made the quantity say 225. I'm selling it. I have sold 3 lots. Add. I see my position. You can cross verify what I have done and you can click. So do you want to set MTM alert or you want to skip? Say I want to skip. Now I'll go here and I know what is the Greeks. So despite I have been a long future, but my combined position is more tilted towards the negative side. So this will tell you that what is the Greek of your position, how much theta. So like the strategy tells 1 day pass by, I'll make 4,200 rupees if nothing happens, if the market remains where it is. Vega is 500. If the volatility shift, how will it behave? And analyze it. So this way you can analyze your trade. You can add your custom strategy. I guess the number of leg addition is 25. So if you have something more, you do write back to us at support@quantsapp.com and we could extend to your particular account also. But by default, you can add 25 legs to your strategy. So this way, Optimizer Manager helps you to analyze, get the strategy and manage it. Clear? Now comes very important. The second tool is the option backtesting. It's one of the most premium products when it comes to the options trading because it's very simple to backtest a equity strategy or a future strategy because the you can say the conditions are not much. You have either you're buying a future or you're selling a future, but I can't do both things together. In options, you have beautifully, you can create your own structures. I can be a positive, very positive, mildly positive. This way you have your own structures. So you need to backtest your idea so that your conviction becomes stronger. You can put more money into it. That's where you will be able to leverage out. So in option backtesting, how it works, let's see that. So let's pick up one strategy. So there is a belief we sell the option at the start of the series and hold on till expiry will make money. So let's go with the same condition I'm doing for the Nifty. You have the start and the end date. By default, we have kept 3 years, but you can go till inception. So when this contract came into the derivative market, you can go since that. So in Indian market, you had 2000 and 2001 where the options were there. So you can go back till then and do the complete analysis. So say I'm keeping it right now only Nifty for the 3 years. I say I want to sell an option. When I'm doing a short straddle, we are selling the call and selling the put. Now, I need to tell the algorithm which strike I want to sell. How will algorithm come to know what is the logic for me? So how do we define the strikes? Now you have 2 options here, the strike and the delta. Coming up to the strike, when you say a strike, 0 means at the money, positive number. So when I say 1, it means the one strike above the at the money. When I say 2, it means 2 strikes above at the money. Similarly, when I want to say strike below, I will say -1, which means 1 strike below the at the money. When I say -2, it means 2 strikes below at the money. Clear? Very important. 0 at the money. 1 strike above. 2 strike above. Similarly, you can go for 4, 6, whatever you want. -1 strike below. -2, 2 strike below. So in Nifty, what is the strike difference? 50. So 1 strike above is 50. 2 strike above is 100. So keep in mind, if you want to sell 100 difference, you have to be in even numbers. In Bank Nifty, 1 strike is 100, 2 strike is 200. Clear? So this is the strike-wise nomenclature. Now coming up to the delta. So one who are familiar with the delta concept, for them it is very important to understand. Now when I say delta, delta of 50 means at the money. So when you know option, so instead of a decimal, we have kept it in a round 1. So 0.5, it is 50. Okay, so the range is 0 to 100. Now for the put also 0 to 100. You don't worry about the negative sign, that the algorithm has taken care of. So when you say at the money, it is 50. When you say out of the money, it is less than 50, 0 to 50, 0 to 49, I would say. Or when you say in the money, it would be 51 and above. Okay, so this way you need to be specified what strikes you're doing. First, say for instance, now I'm making it simple. I'm doing by strike wise. I'm selling. So I click on the radio button, sell, call, drop down, I select strike. I put the strike as 0. I go to add. Now, second radio button, again, sell. Now I want to sell a put. So I click on put. By default, the strike will come up. So make sure either you can have your definition based on the strikes or based on delta. It cannot be a combination of both. So if whatever you select the first option, the same will come for the rest of it. Again 0, I am selling at the money put. So again 0, 0, 0. Now I'm saying for which expiry I want to do, weekly, monthly. So when I say weekly option, so all Thursday it will be taking up. When I say monthly option, it will be taking up the last week. So last Thursday of the month is the one. So those way you have it. I guess so now people are more interested in weekly. So let's do this monthly option first, and then we can see for the weekly also. So when I do monthly, now come to trade to expiry. So your trade initiation is there. You are saying to the algorithm when you are entering the strategy. So the notion is big money is when there is a big premium. So a big premium is at the start of the expiry. I'm going and selling at the start of the expiry. So say for instance, I say 20 days before the expiry, I do it. And I hold the expiry till, hold the position till the expiry date. So now what does it mean? Date to expiry, trade initiation 20 days before expiry, I initiating it. Trade exit 0, that means I'm holding the strategy till expiry date. You can select, say, if you say instead of 0, you say 5. It will mean that you are exiting the strategy 5 days before expiry. So you can do a backtesting intra-expiry. It is not necessary to be expiry on expiry because it will not give us a realistic picture. I need to know my nature. I need to know how much time do I stay with the strategy and then backtest it. Okay. So now let's first do 0 only. So I am doing 20 days before and exiting on 0. Now we have kept something called as OI greater and volume greater. It means it will exclude or it will not take the trade when there is no open interest or where there is no option traded. It is very important. Why should we do an illiquid? In Nifty, Bank Nifty, this condition doesn't apply, but when you do the stock backtesting, this condition is very important. So yeah, in backtesting, you can do for indices, for the stocks, the listed stocks which are there in the derivative market, you can go and do it. So it's open. Now, if you can have your own condition, so we have kept it positive, you can have your own benchmark. I want OI to be minimum 10,000. I want volume to be minimum 10,000. So you can define your own parameters. Target profit, stop loss. That we will understand. So let's understand what we have done till now. I have selected Nifty as my instrument for backtesting. I am doing the backtesting for the last 3 years. The strategy which I am doing is selling the at the money straddle. So the legs are selling a call option, selling a put option. So CE means call, PE means put, buy, sell, you are defining it. I'm defining via strike. So strike 0 means at the money. So in both the case, it is 0. Now I have selected monthly expiry. I'm entering the strategy 20 days before expiry. And I'm exiting, I'm holding on till expiry. So 0 means expiry day. Backtest. That's it. So last 3 years data, it has scanned, evaluated, and given the output. Strike rate. So here comes first the statistics of your backtest. The strike rate is 49%. You are making loss in this strategy. So in short, it's a negative strategy. So the notion of big money, big premium makes big money is not true. Timing is most important when you come to options. There comes the edge. It's not basically the premium. It is basically what time you are doing buy or sell makes the whole lot of difference. So profit factor is 0.85. Profit factor is nothing but this total profit divided by total loss. Average win per PNL is 8970. Average loss PNL is 10,000. Max win is 23,561. Max loss is 32,003 rupees. You have total win and total PNL. So we saw that the max loss is 32,000. Okay, we have almost equal amount of win and loss count. Now I say, now I want to say that I don't want such a big loss. So I want to go and do the stop loss. So I say whenever the stop loss is say 8,000, exited. So I'm keeping stop loss as 8,000 and then I'm seeing the PNL. Now we saw the difference. I have optimized my strategy. So I have holded the strategy for 20 days. I saw what was my PNL. Now I have seen, does the stop loss will help it to improve it? So we kept a stop loss of 8,000. We saw the results have changed drastically. a loss strategy has come to a profit strategy, but the strike rate has dropped down. Okay, and similarly, my average win has not suffered so much. So overall, it was a good decision to put a stop loss. Now, this way you can keep on doing. You can find out which value works for you, how much is the realistic one. Now, say I want to put a target profit also. You can have a target profit defined. Whenever I'm making, say, 10,000, I want to exit. And say whenever I'm losing 5,000, I want to exit. And it will run, and here is the result. So you can see that the way the backtesting is, like, it is just on a click. You don't realize it, like, wow, it's been done. So now option trading has become really simple, because it's very important to get a conviction. We backtest our ideas. So here is the tool which helps you to backtest it. So my max win is 19,900. Why? This is because one particular day the entire jump came. So it did not exit at 10,000. So one day prior it would be 9,000. Next day it is 19,000. So you're getting 19,000. The data currently we have here is the end of the day data. So it is EOD data. So based on the EOD data, you can conduct the complete backtest and understand how is the strategy. You can go and do any leg, you can go and do n number of legs, be it 1 leg, 2 leg, 3 leg, 4 leg, anyways. Now let's see, we can do some interesting study. Now we saw how basically doing 20 days before and 0 days, the money was not made. Now let's see, we do the same thing now in Bank Nifty. Just a caveat, whatever we are discussing today is just for the example purpose. Don't take it as an analysis purpose. Don't go and trade on it. So it's just from the understanding purpose. You do your own research, understand the concept, and then the power is in your hand. Say Bank Nifty, now I'm doing multiple straddles. So instead of doing one straddle, I'm doing a multiple straddle. I'm doing one at the money straddle, one out of the money straddle, and one in the money straddle. So let's do, I'm selling put strike 0. Sorry, I need to select strike 0 at, I'm selling call strike 0 at, I'm selling call strike 1. So one strike above. Okay, I'm selling put 1. So mind you, whenever you're doing this, the strike is based on the at the money. It is not either this call or put. So plus sign means strikes above at the money, minus signs means the strike below it. Clear? Again, add call strike -1, add put strike -1. Okay, so let's see it again. 0 call and put sold, 1 call and put sold, -1 call and put sold. Done. I'm doing this on weekly basis. Now I'm doing this 6 days before expiry. So that means I'm doing this on Friday, Saturday, Sunday, Monday, Tuesday, Wednesday, Thursday. So you have 6 days, and I'm exiting this strategy, say, on 0 day. That is on Thursday. OI stuff I'm keeping the same. I'm not keeping any target and the stop loss. So here you have the complete trade details. I will go and backtest it. So it is evaluating each and every weekly option and giving you the data. So you have a strike rate of 59%, PNL of almost 50,000, profit factor of 1.06. You have 81 times it is been profitable, 57 times it has been a loss making. You have max loss of 45. You can optimize it by putting the stop loss. Okay. One very important thing which I missed out. The first thing, the table view. So you can have a table view and a graph view. And the most important thing, you can export the complete details to your email. So when you click on this dots, or in a Android, you have the email icon. When you click here, it will export it to your registered email ID. So you will have the CSV files, which would be giving you the trade statistics, and it will give you the strategy, what you have put, and in the trade statistics. The risk parameters would be there. The statistics would be there. So now you can backtest and keep it for yourself. So when you go, you can see this. Now you can have a trade details. When you click on view trade details, you have something in Excel table view. So when you click on table view in Android, you will get the complete trade details. So minor 1-2 places there is a difference in Android and iOS. Otherwise, 99% the complete look and feel is the same in iOS and Android. So here you get the complete table view. So you have the entry date, exit date. Prices are not there because as per the exchange, we are not allowed to resell the data. You have the MTM, what is there in the individual strikes. If you want to have, you can go back and see the Bhav copy for the prices. So you have the complete list of trades, how much PNL you made on each trade, and you can get it, close it. Now I saw for the 0 date. Now let's do, instead of 0 day, I say I square it off 2 days before expiry. So that means I took a trade on Friday and I'm closing it on 2 days prior, which is Tuesday. Okay. Backtest. The PNL has changed. The profit factor has changed. The strike rate has changed. So you see that every day has a meaning in it. So that's why options are so sensitive to time. And that's the beauty of this product. You can make a very good money if you are you're doing a proper strategy at a proper time. Entry is at a proper time, exit is at the proper time. Clear? So you have a short strategy which makes money, and you have a long strategy which could make money. So backtesting tools gives you an edge to backtest your idea since inception. You can change this time period to you can say whatever you have. So in case of weekly, we don't have before 2016 Bank Nifty, but if you have going and doing, say, I want to do it from 2000. One sec. Yeah. So now I can go and select any date. Say I want to do it from 2010. And I want to do this in monthly. And I want to do, I'm keeping the same 6 and 2 backtest. The scene is different. So over the periods, it is not worked. Because the dynamics of Bank Nifty has changed once the weekly option has come into perspective. So the strategy which was there, which was making money, which is making money currently, may not be making money in the long-term picture because the complete dynamics of Nifty and Bank Nifty has changed. So this way, backtesting tool gives you an edge to backtest your idea based on the strike, based on the delta. You can be creative in your strategy. So there is sky is the limit. So here is the backtesting one. Now we have the third most important algorithm which comes is the option triggers. So let me first show you open interest. So now let me define you when you come to an analytical tool. So if I'm a short-term trader to a 1-2 days trader, which all product comes handy to me? The first one is the option triggers. It's a premium algorithm. Then you have synopsis, which gives you the bird's eye view of the market currently, how it is behaving. Open interest, it tells you the open interest at various strike prices, and you can do much more analysis in that. Then you have the IV, which is the complete volatility suite. Then you have built-ups, which tells you where is the longs getting built up, where is the short getting built up. Also, you have the sector analysis in that. Then comes the option chain, which shows you the complete strike-wise detail of Greeks, of IV, of the way you want it. So these 6 products is something as a trader, as an option trader, day in and day out, I'm using it. So this 6 product is something which I'm using every day, which helps me in my analysis, which helps us to come up with the research calls. This is the main brain. Now you have something called as an option gain and rollover, which are more expiry centric products. So when it comes to option gain, which will come to, so that is basically a expiry day product. So we don't use it quite early. It is more meant from the expiry perspective. Rollover, to get an idea how much is the position getting rolled over. So you have the rollover. So how much is the position getting rolled over is something which we look in the last week of the expiry. Okay, so rollover is a concept only meant for the futures. It's not meant for the options. So now we are discussing on the analytical tools. The first one, open interest. So open interest will tell you about how is the OI distributed among the calls and the put. Okay, you have your symbol, you have your expiry, you can change the symbol, you get the list, you have the expiry. So in case of weekly options, for bank nifty, you have all the weekly options. In case of a nifty, if I go to nifty, you have all weekly, all monthly, all leaves. So the entire options which are there in nifty, all the expiries are shown here. Okay, so let's understand how it works. So when you go into open interest, you can see the OI distribution in the option. The green is the call, the red is the put. So basic one, the highest strike wherever the green is, the highest call is placed, that is basically a resistance. The highest strike wherever there is a OI on the put side, that is a support. So this is the broader usage, the main crux of the OI option band. You might be receiving a lot of notification from our end on this concept, on this tool, how we are using it. So you come to know weekly basis, say you have 11,100 as a very strong resistance. Supports are low on the weekly. Now when we come to say monthly, in the monthly, when you select, you will see this dotted one which shows you where is the future price. As in weekly, we don't have a future price, the data is not there. In monthly, you get the future price. You see where is the highest call and put. So in Nifty, presently the both highest call and highest put is placed at 11,000. So you can see how close are they, what is the value. So on the lower side, x-axis, you have the OI in blacks. Y-axis, you have the strikes. You can use your pinch to zoom in, zoom out the way you want. You can change the layout. So you want some different chart types, you can go and select the one you wanted. You want to see only call, only put, or the put call ratio, PCR. So basically this PCR will tell you the strike wise PCR put call ratio, the total put OI divided by total call OI. So here is the graphical one. If graph is not that readable, you can see the table, because in options it will happen that there would be 0 puts and there could be 1 lakh call. So the ratio will be completely infinite. So it's always better to have a table view when you're looking at the PCR in the open open interest. So you can see where the ratio is. So 11,000 having 1.06, 10,900 having 1.19. So you have your own analysis. If you see that the PCR is increasing, that means the strike price PCR is increasing. That means support is building up. Similarly, if the PCR is reducing, whatever would be the reason, that means the resistance is getting stronger in that strike. Okay. So now say I go back to board graph 1. Now come most important is the change in OI. If I'm an intraday trader or swing trader, what most important to me is where is the change in OI? How was the day spanned out? Because this will tell me like in short term how the traders have behaved. Whether they have exited the trade, whether they have pulled on the trade, whether there is some sign of panic among the trader. So change in OI, on the right hand side you see it is a positive value, on the left hand side is a negative value. So if the OI is increasing, that means support and resistance is getting stronger. If it is decreasing, that means it is getting weaker. So for the day, if I have to evaluate Nifty today, we saw a fresh call writing in the strikes of 11,000, 11,100, 200, and we saw unwinding or decrease in OI in the strikes of puts 11,000, 11,100. Right? So this was your seeing put unwinding of 2.85 lakhs, whereas the call was 7.9. You can see the table view. You can see the increase and decrease in the numbers if you want to go and see the table view. So this way you see. Now if you want to say why you need to know the change in OI from the custom time. So say for instance today was some the entire fall which came in the market was after 11 o'clock. Till 11 it was in a range, it was about 11,000. At post 11 o'clock we saw the breakdown from 11,000 and how it behaved. How was the shift happening? So I say 20th August. I want to look at from 11 a.m. So here is the change. The prior one was as on yesterday, from yesterday to today data, while this data is from 11 a.m. to the market close. So from 11 a.m. if I look at the highest writing was seen in 11,000 call, nearly like 7 lakh shares. Unwinding was seen in 10,700 put. So sort of like the people who had bought yesterday put actually booked out. We did not see much of the unwinding happening from the 11,000, 10,950 or the 11,050, 11,000 put option. So it was a minor one. So overall, we saw 11,000 call getting added. So this way, custom time you can do from any time period. Say for instance, today we have Wednesday. Say Monday was RBI policy. Assume it. So I say Monday. No, yesterday was the RBI policy, 19th August, and the time I want to look at for the say 2:30. You can. It's very important when you're doing any result analysis, when you're taking position in the stocks prior to result, before and after. You know how it panned out after the result came up, whether the traders have exited their strategy, exited the position or holding on to it. So from yesterday, aggressive writing at 11,000 and 11,100 calls. So this is where you evaluate it. Change in OI, believe me, is one of the most fantastic tools. It gives you a complete bird's eye view at one glance, like how the things have changed across the strikes and things. One who have attended our workshop would know that how much stress, how much emphasis we put on the change in OI, because it helps you to read lot many data. So here you have the open interest. Now we'll go to the option triggers. Option trigger is one of our premium algorithms. So as you can see, this is one of the finest algorithms we have it, which helps you to get the trade idea instantly. So we have a good algorithm on this, and we have a whole trading plan based on the option triggers, which I guess my workshop students would be knowing it. So our workshop students would know how we use it. So option trigger basically gives you stock-wise details of highest call and highest put. So you can see highest call, highest put. The first thing you come to know from this product is for each stock, which is the highest call, which is the highest put. That means where is the resistance, where is the support. Then if you look at the data, what data are there? If I look at Axis Bank, 667.2 is the future price, the closing price or the future price where it is. 700 strike is the call, 620 is the put. So 700 is the highest call for Axis Bank, 620 is the highest put for the Axis Bank. The OI on 700 call is 23,54,000, whereas on the put it is 6,90,000. So you have a significant OI on the highest call strike. How was the OI during the day? So the OI change, you can see it is 2% for the call, and for the put it was insignificant, like 0.35. So this way you will come to know how much was the OI change for the highest call and highest put for the day. Then comes the call difference and the put difference. It tells you presently the stock is how far from the call strike and how far from the put strike. 1.3 and 9.56. So, sorry, 667 Axis Bank. So it is 4.92 and 7.07. So it is almost 5% far from the 700 strike. Similarly, it is almost 7% above the highest put strike. So this way you get the data. Now we have done some color coding. So you have the sort thing. You have to sort by symbol name, call difference, put difference, call OI change, put OI change. So say for instance we do call difference, it will go from a descending order. You have the stocks which are like you see the max unwinding to the max addition. Now the green denotes the strikes which are in the vicinity of +2 and -2 of the highest call strike. The yellow will denote the strikes which are in the range of +2 to +5 or -2 to -5. So you have a good algorithm which works on it. Like it tells you where could be the likely triggers, where could be a likely opportunity for going long, where the panic button could be seen in the writers. So this way, this algorithm helps you to actually find the trading ideas on your fingertips. So like every 5 minutes you have the data which is being updated, and you get a real-time basis, know the stocks where could be a positive triggers or a negative triggers. Similarly, if you see a stock which is close to the highest call and it's seeing an increase in OI, you come to know whether it's in a buying mode or selling mode. So you will have a multiple data point which you can infer from this tool to come up with a decision whether the stock is facing a resistance here or getting a good amount of support, and that could be a possible triggers. So the option triggers you can have it for the expiry, the one expiry which you are looking. So if you do weekly, you will see only Nifty and Bank Nifty. If you do monthly, you will see the stock options along with Nifty, Bank Nifty. You can sort the way you want. Symbol name, put difference, call OI change, put OI change. So it's in the premium algorithm category. So you have 3 premium products. One is the optimizer, second is the backtesting, third is the option triggers. Now we come to IV. So IV is something which we have introduced recently in the last month. So what exactly is the IV? So it basically tells you the complete volatility description at one go. So you have various sub products into it. The first one, the wall grid, gives you the bird's eye view of the IV for all the stocks, indices at one go. So you have for stock price details of IV, implied volatility, HV, historical volatility, IVR, implied volatility rank, IVP, implied volatility percentile. So IVHV is known to everyone. IVR is basically telling you where is the current IV in terms of the range of last 250 days or the days which we look out. So the look back period of 250 days is meant for IVR, IVP. You can change it in the pro version. So you can change this look back period to say from 250 to say I want to know in the last 90 days which are the stocks which are at the highest IVP or IVR range. So I can change the look back period of 90, click on get, it will compute and give you the output. So basically in 90 days, and now I filter the stocks based on IVP. We know the stocks which are like at the highest range of IVP and IVR. So it's in a degree max to min. We have given the color code also, so it's been defined on the upper panel. So basically IVR tells you where is the current stock in the last look back period, where does it stand. So when I say 100 means IVR, that means it is at the highest point in the last 90 days. Close to 0 means it is at the lowest point of the last 250 days, look back period 90 days. Similarly, IVP tells in terms of days. So like how many days the IV has been below the current IV. So when I say IVP of 98 means 98% days in the last 90 days, the IV was below the current IV. The current IV is say Engineers India 85%. So if I have to read IBUL housing, price is 473, IV is 101%, HV is 109%. So the stock is very volatile, so the historical volatility is also high. IVR is 84, IVP is 93. So you can see and evaluate the stock, how much sensitive it has become. So it is almost at the highest point near the last 90 days IV. So this way you can change the look back period. Similarly for the HV period also you can change the look back period and calculate the way you want to. So this custom change in look back period is a pro feature. So you will get in the pro. In a free you get the complete 250 days and 20 days. So you get by default a good last 1 year data at one go. So data is a real time data. It's like a 5 minutes update data which is there in the application. You can sort the data by symbol, IV, HV, deviation in IV and HV. So one where there is a highest deviation to the one which is at the lowest one. So case of Reliance Capital, IV and HV is like 141 and 83%. While if you go down, in case of DHFL, the historical volatility of the stock is 182%. Currently it is 115. So this way you know the stocks which are having the deviation. Then comes the wall skew. So it's one of the oldest one. It actually tells you the complete skew structure, the smile, how is the IV placed across the strikes. The shape of the wall skew helps you to gauge whether it is in the trending mode or whether it's in a sideways mode. So this way, say for instance like the Nifty now, you can see it's like in the 10,400 to 11,600. This is the broader range. So this is the weekly one. Say for instance, if I look at monthly, you can see the price structure. You can zoom and see where is the, so you have 10,250. People are getting lot many pessimists, so they are using the option as a hedge to use protect their portfolio. Then comes the IV chart. So basically IV chart is very important. It will tell you where for the look back period of 250 days, where was the highest max IV shown in green dotted line. Where is the mid IV shown in the red dotted line, and where is the current IV shown in the white dotted line. So it will tell you where is the implied volatility currently trading and how far is the deviation between max and min. Second, it will tell you the IVR and IVP for your look back period at the same page. So IVP for the last 250 days is 74. That means 74% time in the last 1 year, the current IV was lower than the current IV of 16%. IVR of 23%. That means the current IV 60.35% is how far from the max. So max and when you have and where is the current IV. So it is telling you the range. It is at 23%. If it goes to say 39%, it will become 100. Right? Now from here, visually you can go and see like how is the IV structure. Is it on the verge of breakout? So if I have to read this, if I look at the till 28th May it was 16 and today it is nearly 16.35. So we are almost at 3 months highest point. If we see this range breakout, so we can expect some more volatility coming up in the market. Else, volatility is a mean reversion category. So we don't see a one-sided up or one-sided down. It will go up, it will mean revert, again go up, it will mean revert. So this way. So right now, at this current time, volatility is very important to be looked out, both from the Nifty and Bank Nifty perspective, because it is a very crucial point that it can break the last 3 months and then some sort of like a negative sentiment can continue. So volatility is something, one important data point which needs to be seen now. So you can see the table view, graph view in that. Then very important is the historical IVR IVP. So I want to know like in a Nifty, how has the IVR IVP behaved over the period of time. So you get the data, you can zoom and see it. So you have red and green as IVP and IVR and yellow as the IV. So IVR and IVP is on the left hand side, IV is on the right hand side. So you see that IV has gone to 100 during April phase when we saw the correction in the market. Thereafter it pulled off. And do we see any trend in IVR IVP? Is it in the rising mode? Is it in a reversal mode? We can read from this data. So this analysis is very important when you're taking any stock position, and especially the high beta stocks, because you need to be on toes when you're taking on the high beta stocks in terms of volatility, and you have not many data points. Similarly, you have the historical implied volatility and a historical volatility. So IV, HV, historical. So here you have again the date. You can go look back to the data since inception. So by default is 3 years, available to all. So even in the free mode you have the 3 years. In the pro mode you can go and do it since inception. So you can even see in 2008 when the panic was there, how did the IV behave. And thereafter, like in 2010 when the market 10-11 when market was consolidated and again it came back, how did the IV behave. So this gives you a very good information in terms of how the volatility has behaved in our market over the times. So you have IV, you have HV, historical one. You can see if it breaks the historical IV, how much it can go. If it breaks the implied volatility, how much it can go. So the wall trend is something which is very important to look out every day, because it will tell you which are the stocks which are at a higher implied volatility. Higher implied volatility means the options are pricey. So when you are buying an option, when you are buying a pricey option, you need to know that whether it has so much potential to give you return or no. Else it will end up putting lot of money but will not make money. So higher implied volatility, we need to be cautious, and because there could be a reversion in the volatility and we can be filled because of the volatility falling. So when you're taking a stock option, it's very important to look at the IV and look at the entire volatility structure. Wall grade IV chart is very important. So you have both free and the pro features in that. Historical analysis, look back period is a pro feature. Rest all the values you get by default a good amount of data. Now comes, we have seen option triggers, open interest, IV. Here comes the build tab. Sorry. So when you go on build tab, so there are two categories into build tab: instrument wise build tab and sector wise build tab. So the build tab product tells you the stocks where we are seeing the long build tab, where we are seeing the short build tab, where we are seeing long unwinding, and where we are seeing short covering. Now, what do you mean by a long build tab? When the price is up, OI is up, it is called L, long build tab. When the price is down, OI is up, it is called short build tab. When the price is down, OI is down, it is called long unwinding. And when the price is up, but the OI is down, it is called short covering. Very important. The first step in your analysis should be to know for today what is the stock doing. Is it in a short mode or is it in a long mode? When I am seeing an aggressive short getting added in a stock and I go and do a buy trade, it's against the trend. So we are going against the trend. Similarly, if there is a huge long addition and we feel that the stock is near the resistance level and we should do the short thing, we should avoid it. Because your derivative data is showing there is a good long addition happening. There could be a minor pause in a trend and a breakout could be expected. So going against the trend, riding the trend is the first clue which you know from the build-up. Short covering, if you track this data on a daily basis, you come to know that this stock was seeing the continuous short and today it's showing short covering. That means the bottom is in place and we can expect some sort of bounce back. You can play for that. So this is something very important when you are an intraday trader. Before taking a position, look at to the build up and see how is the build up for the day, how is the build up during the day. Post 5 o'clock, because at 4:45 we have the Bhav copy update coming up. Post and see that on an EOD basis, how was the position carried forward. Look at the stocks where there was significant long addition, significant short addition. If that fits to your other research criteria, it can be in the watch list. Get it? So if I have to look at today, we got a short addition in Nifty and Bank Nifty. Bank Nifty, over this series, we have seen a good short accumulation. There was in between short covering. But yes, today again we have a short. Then you come to know market structure at a time. Today there was 78 shorts, 56 longs, and unwinding was marginal. I can go and do the sorting on price and OI, increase to decrease. So the Nestle saw a good long addition. Biocon was positive, but the OI was not much. If you look at rest of the stocks like a IT, Tata Elxsi, just that was more a short covering ride. Hero Protocol, it was up, was not supported by a long addition. Then you come to know the stocks where there could be a good OI addition, but the price did not move. So there was like a Havels, the OI was 12%, price down was 3%, a good short accumulation. Tata Motors again a short accumulation. So this way you can read the data. Manappuram, we saw there is a 7% OI increase. The price increase was marginal. So it could be like in a watch list and you can see if any trended move is there from our other analysis. We can club it with a future data point. Giving me very important tool when you are a trader. Even when you are a positional or a swing trader or something, you need to have this at back of your mind to know you're not in a wrong side. Okay. Now you have the sector built up. It is a new introduction which we have done it. So sector wise, which are the sector which are seeing the long addition or the short addition. So you can again sort by price and OI. So not much of the longs was seen. If I look at the OI stuff, highest OI was all in the short side. So PSU banks saw a good short addition, cement saw a good short addition. If you look at the metals, price-wise, the metals was the tempter in today's trade, 3% down with the OI up by 1%. So it is not the sector bifurcation is not the price is not based on the indices price which we get from the NSE. It is the calculated volume weighted average price which we have derived from the composition of the stocks. So you don't have an index for cement, but you have derived from the price and OI of the indices. So we have calculated it. So all the price and OI is based on the our in-house research team analysis, which we use day in and day out. So built up is basically a future product, very important to the start. Then you have option chain. So option chain is again a free tool. So it gives you the complete synopsis, strike-wise detail at one place. So when I look at say monthly expiry, so by default, here the green means in the money option, the red triangle means out of the money option, and the yellow means at the money option. Okay. So you get the complete information, what is the premium of this option, how much change is seen today, what is the IV, what is the OI, how much the change in OI was there, what is the volume. Along with that, you come to know the strike-wise Greeks. One who uses the Greeks will really know that how important it plays a decision while picking up a strike. So you come to know whether you want to go for a delta play strike, say 0.5, I'm going towards the money. I don't want to go for the strikes more than 0.3. Sorry, less than 0.3. So I'm not going to the OTM less than 0.3. So that means I need to either go for a buy of 11,050, 11,000 or 10,950. Because we are closer to the expiry, the delta becomes sensitive. We are far off expiry, this delta would be little far. You would have got a better range. But when you're closer to the expiry, everything becomes very sensitive. So you get the strike-wise Greeks of delta, gamma, theta, vega will come to know if one day pass by. If I am holding 10,950 call, if one day pass by, everything remains the same. I will lose almost 6.9 rupees in my option in the call. In the put, I will lose 6.7 rupees in the put. So you will come to know at one go, is it advisable for me to hold the option or exit the option? What is the risk I'm taking if I'm holding the option for the 1 day? So since we are almost nearly, we have 8 days, so this theta value is low. If it is close by, this would be high. So say for instance, I do weekly option. Same 10,950 strike, theta is 31 rupees for the call and 37 rupees for the put. So you can see how this value changes with the time. You can read the Greek value for picking up the proper strike. So option chain is the complete picture of the option at one go for the strike price. Now we come to a very important tool where we have done a few additions recently. So the synopsis. So currently in synopsis, if you look at from the iOS perspective, you will see only the futures OI. But if you look at from the Android perspective, you will have two more tools called as options OI and FNO volume. Okay, so basically in iOS we should have this tool in our next release, which is due by this weekend. So max next 3-4 days you should be having this tool with you. So for understanding purpose, we can understand how this will help you. And for the Android, you already have this tool in your latest release. So update it to the latest release to get the new tool which we have it. So the first one, the futures OI is basically the heat map. It will tell you where is the long, short, long unwinding, short coverage. So if you look at the data today, so the longs were there and you have the shorts. So you saw that sale, idle housing, Tata Motors for the short one, Tata Motor, DVR, Tata Power, Yes Bank, Capital, IDBI was a short long unwinding. Then if you look at Tata Elxsi, Just Dial, Concor, NFSL was a short covering. So the color depiction is quite soothing. You will come to know at one glow, like looking at the complete structure, is it a short day or is it a long day? How is the data being spanned out? So you have the complete pie chart also. So market structure at one go. So if it's a short day and if I'm doing a bottom fishing, so I should go with a low risk strategy. If it is a bull day and I'm going with an aggressive strategy, that's okay. So you come to know at one place what is in the structure for the day. Now comes the options OI and FNO volume. So it's basically like a intraday tracker for the options. So one who does intraday trading or one who looks out for the opportunity for the swing is very important because it instantly tells you like which are the stocks which are seeing the action, which are the strikes in that stocks which are seeing the action. Now coming up to the first product, options OI, it is based on the options open interest and price. So those stocks where there is a good long addition in the option, short addition in the option. So long call, long put, short call, short put, long unwinding call, long unwinding put, short covering call, short covering put. So if you look at in your mobile, by default you will see three stocks being displayed. When you click on plus, you will see the complete 10 stocks getting displayed. So it's just the view change between the iPad or the mobile one. All the data is presented in all forms. So when you click on plus sign in your mobile, you will see all the 10 stocks, 10 strikes. And when you click back, you will see the reduced one only 3. So you can see that today was indeed Nestle. You saw Nestle, Kotak Bank, long addition, Maruti long addition on the call side. On the put side, you saw Ultratech, Ultrasemco, Gain, where the shorts were getting added. So when you look this at say 10 o'clock in the morning, so morning when you're looking out for the trade, you come to know which are the strikes which are moving today. So you can pick up the strikes, then cross verify using the open interest tool. Where is the highest call? Where is the highest call? How is the option band? You can go and see from the option trigger, is there any opportunity for the trigger? Look at the IV product, see how is the IV placed for the stocks. If it fits your criteria, you're good to go. So you can have a complete data analysis using Quantsapp various tools. So you have the bird's eye view, you will come to know intraday basis which are the strikes which are moving up, moving down. When you are seeing the fresh call writing, so short call where the OI has increased but price has decreased, right? So ONGC 122.5 strike call saw 13,500% of OI change. Volume, when you click on that, you will get the increased version wherein you will see volumes, how much volumes were traded in that. You click anywhere, you get closed. Say Bank of Baroda 95 call option saw the short call. So you have OI change of 2,700%, price change of 39%. So it's in the money call. So you can go back and see how the option in the option chain and see the strike price decay or in the OI also. So this way you have the short put. So a short put is basically little bullish. So ITC saw the short getting added on the put side. TCS saw the short getting added on the put side. Then you had Sun Pharma getting the short added on the put side. Then you need to look at basically the short covering. So in options, it said that short covering is quite ferocious. So you will come to know the stocks where there is a good opportunity on the long side. So short covering call means the writers are getting trapped. So you have the OI which is decreasing and the price is increasing. The Petronet was the good covering, so the good short covering move. Then you had Hero Motocorp, MFSL based on that, Biocon. Whereas on the put side, it's all both the sides. So it could be a bullish trigger, it could be a bearish trigger. So IOC was on the negative side, Vedanta was on the negative side. So this way, you don't have to look at 160 stocks. You have to look at the stocks from the options OI. Go and see the build-up in the future. Go and see the option band in open interest. Look out for any figure opportunity in option figure, and you have a complete bouquet of analysis. So you are good to do the complete data analysis trading. Then you have the F&O volume. So now it's basically the highest volume traded contract. So it includes the futures as well as option and as well as the long dated option, that is leaps. So the most traded futures today was Yes Bank, followed by Maruti, Tata Motor, Ibul Housing. So you will come to know which is the stock which is on radar, where the traders are building up the position. So beauty of this product is during the market, and especially when you are at the start of the day, you want to see where the positions are getting built up, which are the options which are active. These products will help you out. So most traded index call option. So it will include weekly, monthly, everything, whatever is the way you will come into picture. Most traded index put options. You will come to know which are the strikes which are seeing the good activity. Stock options call, stock options put, and the leaps. So if I look at the leaps in Nifty, 11,000 call saw almost 662 lots volume. You had 9,000 call, so seeing the 429 lots. So people are now these days quite active on the leaps because they use it for the hedging purpose. Secondly, they use it to set off the time decay impact which we see in the weekly and the monthly option. If I have a strong view but I don't want to give away to the time, then I go and buy the long dated options and you can use it. So this way, nowadays long dated option has come into picture a lot. It is no more just meant for the H9 or the institution clients. Even a retail can go and do it. So just you need to be at the right strike. So this particular tool will help you out getting which are the most active strikes in the long dated option. Which are the expiries which are most active? Not all the expiries are active at all the time. So it will tell you where the activity is panning out. So if you look at mostly the December 19 contracts are most active, followed by June 20th, you have 10,200 trade. So your synopsis will give you the first product future OI, the market snapshot, the heat map, and the pie chart, the complete market structure of build-ups. Option OI will tell you the build-ups in the options, which are the stocks where we are seeing the long, short covering in the options. F&O volume will tell you which are the contracts which are being seeing the highest traded. So this way, your entire chain is there in the option chain. Now we have something called as a PCR. So PCR is nothing but a put call ratio. So for the day you have this, that is the total puts divided by total call. Basically, you have a theory in this. It's basically a more contrarian indicator. Higher put call ratio towards the resistance part, it shows that it's too bullish. Lot of put and less of call means people are getting complacent. They are getting over bullish. And if it has the lowest point, lower part of the range, people are getting too bearish. So you can expect a reversal at those range. Now in PCR, you have a historical PCR. You can go back to the time period you wanted and see the historical PCR. So by default, you get it for 1 year. You can go back and look up for the historical data. So you see that in Nifty, how much was the highest PCR? Normally 1.6 to 1.8 is the highest low, and 1 and below is the lowest point. You can zoom in and zoom out to see the complete OI PCR. This you have for the indices as well as for the stock. So people use it to get the broader sentiment knowledge. So I know whether the market is oversold, overbought. Is it a time to be aggressive on the short side? Is it a time to be conservative on the short side? So towards the back, we should be conservative in our approach. Then These were there from the analysis purpose. So in analytical products, we saw option triggers, which gives you the strikes, the most probable trades which could see a good, you can say, good returns. So the stocks which are probable into that zone and where could the option triggers can come up is shown by the option triggers algorithm. Then you have synopsis, which tells you the today's day, which is the stocks which are seeing the highest activity option wise, open interest wise, volume wise. Then you have in open interest, which tells you the band in option band, so which play a decisive role now. So if you look at the market today, 85 to 90% of the volume is options. So the best way to gauge the market sentiment today is to look at where the options are placed out. Where is the vital support? Where is the vital resistance? And you act on it. Then you have change in OI, which is very, very important. Custom time will tell you like after this point how the options people have behaved. If you look at EOD perspective, you might see the change is very small. But if you look at the custom time and if you correlate with the actual market fall or rise, you will see that at this time period how much was the hand change. Then you have build-ups, which is similar to like a synopsis, long short build-ups, and you have the sector-wise build-up, option chain giving the complete structure at one go. Now, one important product is the option gain. It's meant for the expiry traders, the expiry lovers who want to do the weekly options and are quite active on the expiry day. So option gain is the custom algorithm of the Quantsapp. It is an improvised version of the option trading. So basically, in this, the entire usability is it tells you the strike where the writers are looking at the expiry. So if I'm the writer, I'm the smart money. So basically, the point where I feel the expiry should be is the option gain level. So this is the point where we should be looking at from the expiry perspective. So as the markets are there on the expiry date, the change in option open interest will see this gain level shifting. So you will see that where could be the probable expiry level is from the option gain level, which is there. Graphically, you can see the point where we are making money. So range where the writers will make money and beyond which there could be an unlimited loss. So the writers will try to protect this range. We'll try to see where the market expires within this range. And if at all there are good opportunity on the figure wise, there could be a good short covering, which could result into the gain level shifting consistently. So shift in gain level should be looked at as an expiry is trending expiry. And if the gain level doesn't shift, say for till to 12 o'clock, it means the expiry is somehow cool. So it basically tells you where could be the likely expiry. Secondly, the shift in gain tells you whether it's a trending expiry or not. So again, you have a very important tool here called as EQ level. So EQ level is a point where neither the call writer nor the put writers are making money. So if your underlying is below the EQ level and it crosses the EQ level, you can see the call writers getting trapped. And if say for instance underline is above the EQ level and it falls below the EQ level, then the put writers are trapped. So if I have to look at today for 29th August, the EQ level is 10,936, so which is close to the future price. So we need to be active here how it is moving. But the more usability is closer to the expiry. So if I look at 11,038 for the weekly option, 11,038 above, there could be significant unwinding coming up. Else, the expiry level as of now is 11,000. But you have to look at on the expiry day, where is the gain level and how is it been shifting. So the gain tool is specifically meant only for the expiry trading for the aggressive traders and not meant for the conservative one. So this was a good amount of like analytical tool description which we have in Quantsapp. Apart from that, we have some more tools, info tools. It is good to know, but you may not need to know. So one is the band list, the stocks which are there in the band. So basically, you know which are the stocks that which could be the possible entrance or possible exits. So if the stock crosses 95% of MWPL, it comes into the band, and unless it falls below 80%, it will not get out of the band. So you had the previous MWPL and the current MWPL. Right now, IDP and DHFS are in the band. If at all any stock is likely to enter, it can come into possible entrance, and then you should see that you square off your option or you square off your trade then and there, because once the stocks comes into the band, the volatility reduces or people are not much active. So you can square off your trade when the stock is in the possible entrance zone. Similarly, possible exit. So if the stock has been lethargic, it has been in the band period and it is likely to come out.
And
Then
as
you
usual,
can
any
see lot of
queries, just drop us a
activities
mail
the
on
next day.
support@quantsapp.com,
So it can
and
be in your
we'll help
radar
you out.
for the next day trading
So that's
those
all from us,
stocks.
guys. Thanks a
So
lot for
this is
joining us,
something which
and
is there in
have
the
a good
band
evening
list.
ahead.
Result calendar right now it is nil because we are done with the result season. Otherwise, it will tell you like which are the results expected throughout the so which are the companies which have declared the results. The companies which are declared the result, their calendar will be there, and you can filter based on the date. You have two more tools which are like a span calculator and option calculator, which will help you to find the margin. So the span calculator, you can enter your position and you can get the margin. In option calculator, you can find the implied volatility, or you can do your own and see if the IV changes, how will the Greek move. So this way you can get the data in the option calculator. So you can use the tools for that. Now comes very important is the learn section, where you have lot many things. So we have lot many articles in the learns which can give you a good insight into the option trading. So our CEO Shubham Agarwal, who is one of the gem in the option trading when it comes to derivative, has lot many articles written. So you can know how to trade. So you can go and see the articles. Similarly, on the webinars, we have lot many past webinars. If you guys know, we run a series called as Option Expert Series, which is a continuous knowledge building up series. We have the experts in the industry who have come and shared their knowledge with us. Few have been brilliantly, they have shared which the users are using it and they can see the change. So you can go and see the full webinars. Those everything are free. So you just need to register and you can see the videos. So this is what we have in the complete structure of Quantsapp. And believe me, we are the option lovers. So we look out for building up the algorithm which a trader, which an option trader can use it day in and day out. So the team is meant by the people who have been in the industry for almost 13 to 15 years. And the main reason what we do is because we love options. There's a lot of scalability in the options, lot of custom structures we can create in the options, because we have seen that the markets are getting much more mature. And once the maturity comes, the volatility also has its own role to play. So when to use what is something which is being shown and which is the entire thing. So this is the complete run through the applications. If you have any questions, write to us. Okay, the first question was, what does stars denote on the list of strategy? So basically, when you go on to optimize or find the strategy, the stars are basically based on like the best to least. So it is not necessary the strategy with one star means that you cannot do it. As per the parameter, which is the best one and which is the less one, but you can go to individual strategy and see whether it fits your actual trading style. So one which feels, say for instance, long call will have a 5-star, but if there is a butterfly which has a 3-star and you are more conservative person, then you can go and do the butterfly. So basically the star denotes highest to the lowest importance. What if I want to take a strategy on expiry date? Do I use 0 then? Basically, in optimizer, right now we have not included intraday option strategy finder. So you cannot find a strategy from morning to afternoon those way. You need at least 1 day of data. So the strategy also optimizer code would be minimum 1 day calculations there. Intraday option strategy in the optimizer we have not yet come up. I was back testing, and when I said 45 days before expiry, I always get no trace found. Also, I don't see back testing okay. So basically, we have denoted the strategy in terms of the expiry time. So if you have 45 days, it will come down to the prior expiry. So the definition 45 doesn't fit here. We have our API-driven services wherein we can use this thing, but in the application, it's always from the month perspective. So 30 days, if it goes to 35, it will not accept it because monthly wise the current expiry has been mentioned. You can test it for the diagonals and calendars using our API service. So we have backtesting API one. So in that we can use it. But in the application, we will soon get it. We'll modify. We have lot many additions coming up in the backtesting. So this was just our first release. So we are going to get few more advanced algorithm in the backtesting, which will take into consideration all the scenarios. Can we get approx prices of option in analyzer like P&L chart? So basically you can convert it. So whatever profit you are getting, that profit divided by the lot size is the spread. So it's easy way of communicating because most people are usual to the P&L one. Only few can understand the spread chart. So we have moved on to the P&L because it is for the layman's perspective. If 5,000 rupees is made, is good. If 2,000 rupees is lost, it is not good. So basically, in that perspective, I put down the P&L. But you can convert to the spread just by dividing by the lot which is there in the strategy. How do we understand PCR is increasing or decreasing at a particular stride? So we have seen in the open interest, one sec. So look at in the open, in open interest, look at the PCR. So here in the table mode, you get the complete PCR strike wise. So if you keep a track of this, you come to know whether the say 11,000 PCR monthly is nearly 1. Okay, 1.06. So if I start seeing this 1.06 coming to 1.5, so that means the ratio is increasing, the support is building up. Now from 1.06, if I start seeing that it has come to 0.8, that means the support is losing. So now it could, now in short, it can turn to be a resistance. So this way a ratio change can be seen. On IV chart, can you also add mean line in future release? Okay, fair enough. So I'll take your suggestions. So any suggestions you have for us, which you like to be seen in the application, do write to us. So I again say, do email us at support@quantsapp.com because your suggestions help us to grow. So like whatever innovative products we can get, we can see how the traders are looking out for. So frankly, the idea of IBP was the huge demand which we got from our user base, which made us to come up with this product. So any suggestions you have, do write to us at support@quantsapp.com. So that's it. Or any other questions? Thank you very much.